with regard to the accounting for intangibles, so here are the rules. And so this graph may look complicated, but it's not that complicated. I'm going to explain about it now. So the general rule here is just, we have 3 accounting questions. The first question is whether to capitalize or expense. The second question, whether we decide to capitalize an item, how to do amortization. And the third one is if we decide to capitalize an item, when and how to recognize impairment. And the accounting treatment we use, actually it depends on whether the intangibles are purchased or internally developed, identifiable or unidentifiable, has finite life or indefinite useful life. It depends on the classification of the intangible. And first of all, capitalize or expense. So the general rule here is, if it is externally purchased intangible, we usually capitalize those. So we value them at original cost, including purchase price and all other costs necessary to bring the asset to condition and location for intended use. So what can you find here? You find that it is very similar to the PP&E we have talked about, right? So that is for externally purchased intangibles. However, if it is internally developed intangibles, we usually expense those as incurred. However, there are some assumptions. So for example, R&D performed for others, that can be capitalized. Computer software development cost after a certain phase, after technological feasibility is established. So after that phase, we can capitalize the computer software development cost as well. And then the general rule regarding amortization and impairment. So first of all, you should recognize that it is the question of amortization and impairment that only occurs if an asset is capitalized. So, or in other words, if we have already expensed an asset, we don't need to worry about these 2 questions. And then, so there are 3 situations here if we want to classify it. First of all, for identifiable asset with finite useful life, identifiable asset with indefinite useful life, unidentifiable asset, which is goodwill. And of course, it should have indefinite useful life. So we don't have the unidentifiable finite life situation because for all of the unidentifiable assets, they all have indefinite useful life, which is goodwill. Goodwill has indefinite useful life. So the general rule here regarding these 3 situations is, if an asset has finite useful life, yes, we need to do amortization. However, if they have indefinite useful life, we do not need to do amortization. And with regard to impairment, if an asset is identifiable with finite useful life, that is actually very similar to PP&E. So there are 2 steps here. The first step, if the undiscounted future cash flow is smaller than book value, yes, we need to move to impairment. And then the impairment is the difference between fair value and book value. So this is the first situation. The second one, if an intangible it is identifiable, but with indefinite useful life, then in the first step, because the intangible has indefinite useful life, so its undiscounted future cash flow, it is infinite. And then, so no matter what the cash flows are, it is indefinite. So it's not comparable with the book value. It's not meaningful. So that's why in the first step, we compare the fair value with book value. And the second step is the same. The third situation, unidentifiable intangible, which is goodwill. So in the first step, because that asset cannot be, it is unidentifiable. So we compare the reporting unit's fair value with the reporting unit's book value. And if the reporting unit's fair value is smaller, yes, we move to the second step. And in the second step, the impairment is the difference between goodwill's implied fair value and goodwill's book value. And what is goodwill's implied fair value? It is the difference between reporting entity's fair value and the fair value of all of its identifiable net asset. That is the general rule here. And so this we already talked about, right? So this is the first situation, identifiable finite useful life, similar as PP&E. The general entry for amortization is debit amortization expense, credit either intangibles or accumulative amortization. And then we have two steps here, similar as PP&E. The second situation, identifiable indefinite useful life. We don't need to do amortization because it has indefinite useful life. There's no way we can calculate the amortization. And then the second step, instead of using the sum of the undiscounted future cash flow, we use the fair value. The third situation, goodwill, no amortization because it has indefinite useful life. And because goodwill cannot be separately identifiable. So when you, in the first step, we use the fair value of the reporting unit and compare it with the book value of the reporting unit. And when calculating impairment loss, we use the implied fair value of the goodwill. So, those are just some general rules here. And then we're going to look at some examples.